Hey, how's everybody doing? How's everybody's trading week? I hope you guys had a good week. It was NFP, so it was a little bit crazy, but we came out on top like always. You guys, first off, announcement real quick. University is up. VIP Signals is up. And you guys can find those links below. Also, the free Signals chat and the Discord link is also there. Also, everything is down there. So there's that one link, and it should be everything available from us at this time in that link. So right off the bat, we're going over, okay, so I had a person message me, and I've had multiple people message me about they win their trades, right? They're pretty consistent, but they take larger losses, and I'm going to go over the psychology behind that and why people do that and why that's a thing. Most new traders, especially when you're trying to grow a smaller account, this will happen to you. So a lot of it too is like entry time, as far as drawdown, and then also too, as soon as you go blue, you usually take profit. So let's go over how to avoid that. I'm gonna go over the charts for a little bit, and we're gonna come back and talk about it again. Okay, so typically, let's say we start on GBP, JPY. This works on every pair, works on everything. It's mostly a psychology thing, but I'm gonna go over the psychology and the chart behind it, so that way you guys can get more in-depth knowledge of it. So, okay, let's say you had this descending wedge right here, right? And you're expecting this breakout, descending triangle, whatever you wanna call it. Okay. So you had this, and then you wanted to sell here or buy on the break at the top. Okay, so let's say you sell right here because you thought it was going to break. Now, if it goes up, right, this is on the 1 hour time frame. So if it goes up, I'm gonna be sitting in drawdown if I entered here. Put a little circle around it. So if I enter there, immediately goes up, right, away from my predicted direction. So now I'm sitting in drawdown for 1, 2, 3, 4, 5, 6, 7, about 7 hours. So you're sitting in drawdown for 7 hours, okay? And then as soon as it breaks the structure, let's say it breaks right now, you take profit. You take profit because you see blue and your brain automatically reacts to that color, and also too that you're making money instead of losing money. So what happens a lot of the time is we sit in drawdown for so long that we just want to get out of the trade. So what happens is we wait either till it hits our stop loss or until we're in a little bit of profit. So really quick, if your chart or your record looks like this, we can see that he's won a few trades and also lost a few trades. But we can also see that this person has lost more every time than they've won, okay? So back to the chart. When we're looking at that, it's a psychology thing because, like I said, you've been sitting in the trade for so long, you just want to get out of it. So what you have to do is know your risk to reward before you enter that trade and let it hit your take profit, or at least get 2 to 1. So when I say 2 to 1, I mean if you're risking 10 pips, you at least have to make 20 pips in order to consistently grow that account. Now, if you're not consistently making 20 pips, that's okay. But if you're consistently risking, 25 or 30 pips and then pulling out at 5, 10 pips profit, you will consistently lose and you will consistently blow accounts. So to avoid that, really good tip is to have this tool on TradingView. It's a long or short position tool. So let's say I want to enter here. Okay, I have my stop loss above this trend line right here, right? And then I have my take profit. If I'm risking 26, I gotta make 52 at least. So this would have hit your take profit, right? For instance, on this trade. So let's say you entered, you're sitting a little bit of drawdown, you have your stop loss, you have to leave that stuff there. You cannot move it. Because when you start moving stuff, you start messing up your risk management. So if this is a 2 to 1 trade, which is a good trade, let's say I place a 0.01 on it. Okay, I'm risking $2.60 to make $5.50. Now, you can scale that, go 0.10, the next stage up, right? Risking $26 to make $55. So right here at this point of drawdown, we're in drawdown 15 pips. So I'm down $14, okay? And that's gonna happen for the next 6-7 hours on this specific trade. So most people will pull out as soon as they see blue at, let's say, 13 pips. When originally I was risking, 26 pips. So now I'm risking 26 to make 13. That's like a 0.5 R to R. So that means for every 2 trades you win, you can only lose 1 trade, okay? And that's why you aren't able to grow your small account, is because you're risking way too much to make way too little. So you have to let this trade play out. Now, if you go into profit and you're blue and you're getting nervous, you want to pull out, you got to have that discipline to not pull out. So what you can do to make up for that fear, right, to replace that fear, is you can move your stop loss to break even. And once you've moved your stop loss to break even, it's a risk-free trade. So even if it were to go back up, even if it were to hit your stop loss, you didn't lose anything. Now, another common mistake that new traders make is moving their stop loss too soon. So let's say right here, My entry's there. Let's say right here, it very, very, very slightly breaks into profit, and you move your stop loss to entry. And then you're like, oh, I got taken out of the trade. Then you get nervous, or you re-enter because of fear based off of greed or impatience or whatever it may be. So to kick those out, I usually set a rule for myself. If the trade is 30 to 40 pips in profit, because I always go for 80 pips, 50 to 80 pips at least. So if the trade is 30 to 40 pips in profit, I will then move my stop loss to my entry to have a risk-free trade. Now, that doesn't mean I'm going to take my entry out. I'm going to wait until it hits at least 2 to 1. So at least twice as much as I was risking, I have to make, okay? So that's the mistake that most people make, and I see a lot of new traders do it. Almost every new trader I see. You'll enter at the wrong time, or you'll sit and draw down for 6, 10, 12 hours, 2 days, whatever it may be, and then as soon as you hit profit, you pull out because you see blue. Now, that profit, if you sat $7 in drawdown, that means your risk management is completely backwards, because you sat $7 in drawdown, and you only pulled out with $4. So if I'm sitting $7, like that was, let's say the maximum drawdown I hit on a 0.01, or $70 on a 0.10. So if I'm sitting $7 or $70 in drawdown, which is 70 pips on those lot sizes, right? I have to make either $14 or $140 in order to pull my trade out. If I don't do that, that means I have to win every other trade. Or if I'm doing it the way that this person did it, I have to win 2 trades to lose 1. If I lose that 1 trade, then it'll take away my gains that I just made. So if I stick to 2 to 1, if I win the next 2 trades, I can lose 1 and I'll still be fine. If I stick to, I could win 1 trade and lose 2 and I'll still be fine. I'll be break even. So if I win 4 trades, I'm able to lose 8 trades and still be break even. So that's how you grow a small account, and you guys have to do something like do your analysis, right? And then walk away, go watch a movie, go eat some food, go to sleep, whatever it may be, and let it hit your take profit, or at least a 2 to 1. Now, that being said, you can set your take profit if you go to sleep at a 2 to 1, so if it does hit it, it at least gets 2 to 1. It doesn't have to be your full analysis or 80 pips or 90 pips or whatever. But if you set out risking 30 pips, you have to make 60. If you set out risking 10, you have to make 20. And you have to stick to at least a 2 to 1. Now, I trade 2 to 1s and above. Ideally, 5 to 1, 10 to 1, whatever. But the more consistently you do this process, so I come in here and I have my stop loss. I know it's, my stop loss for this specific trade would have been up here, so 25, 26 pips. I know that I have to make at least 50. At least. This is 60 right here, but even at my first key level that I have right here would have been a 50 pip trade. So 25 to make 50. Or if you want to go real technical, 26 to make 52. 26 to make 50 is totally fine. It's right on the dot. So if it were to hit this and you get nervous, you can pull out there. But you got to have that patience. Patience pays every single time. Because right here, it's psyching you out. It's playing the psychological game with you that the market always does. And in order to make it in this market, you absolutely have to let it play out. You have to. Anyways, you guys, hope you guys enjoyed. If you guys would like another video on this, let me know. I hope this does help. And if it doesn't, look at your psychology, look at your trading psychology, especially too if you have other stuff going on in your life, like let's say like family, something, school, work, you're stressed out, right? Everybody's stressed out. Most people work. Most people have, I don't want to say most people have family issues, but I know quite a few people with family issues. So, if that's the case, figure out a way to work around that. And that might be using smaller lot sizes to inherit less risk. Now, once you get better technical analysis, you can completely get rid of your emotions, or work on completely getting rid of your emotions, and just trade off of what you see technically. Anyways, hope you guys enjoyed. And also don't forget to check out the links down below. Ivy League course, university, and everything is down there. You guys, it'll 100% increase your trading ability and your mindset. I put a lot of work into this. Everything I know, everything I use is in that course. And also, I do post a bunch of free stuff on YouTube. So you guys make sure to hit that like button, subscribe, and I'll see you guys next time.